Hello, everybody, and thank you for joining us at this Your Overseas Home webinar. It's your money, getting your pension paid correctly when you move to Spain. I am joined by Robin Thornton, partner at Holborn Assets. And why don't we kick off by Robin introducing yourself and telling us a little bit about Holborn Assets.
Yeah, thank you very much. My name is Robin Thornton. I'm a chartered financial planner, obviously originally from the UK. I've done about 20 years being an expat myself as well. So I've just had a very big birthday as well, shall we say, without disclosing too much in terms of my age. But I've been really helping expats and residents of different countries for about 15 years or so. In terms of Holborn Assets, we're a global wealth management company. That's how we were established over 25 years ago now. Family owned, about 500 employees, offices pretty much all over the world. Portugal, Spain, Cyprus, Dubai, Hong Kong, South Africa, etc. And we really help people out with kind of asset management, pensions, investments, life insurance, life planning, as I like to call it. So it's really anything to do with your financial life. And the kind of tag of right money, right place, right time. The other part of the company is Holborn Pass. So we do, and I'm a partner on that company as well. So we deal with global mobility solutions. By that we mean golden visas, obviously, to various countries, including the US, as well as here in Spain and Portugal. And also the kind of visa process, how do you get there? What do you have to do? All that kind of thing that goes into it as well. Okay,
fantastic. Now, what we're going to do is Robin's got a presentation for us, and we will. But as we go through that, if there are any questions, please put them into the questions tab, which you should find on the right-hand side. And just to get you in the questions mode of using the tech, why don't the audience tell us whereabouts they are at the moment? UK, US, Canada, whereabouts are you? Be good to get a feel for that. I know this is mainly information for British UK people, but I'm sure there'll be lots of helpful information for those who are coming from further afield too. We will, I'm sure there'll be tons of information, and we will send you the presentation afterwards so you can read it again and listen again. Okay, so I'm gonna let. So we've got interesting answers, mainly UK based so far. So that's interesting. Thank you very much.
Nobody lying on a beach in the Bahamas or anything like that. No.
We've got someone lying on a beach in Wales, if that's any
wow.
to you. But no, there's some US people as well, so that's very interesting. Do stick around, because I'm sure we can help you too. Okay, Robin, I'm gonna pass the baton back to you.
Okay, lovely, and thank you for that. So let's just run through what I'm going to focus on today, the kind of topics and agenda. And as Christopher said there, this has got a UK focus, but frankly, it applies to all countries. So if I'm talking about, the health service pensions in the UK, it's the same as in the, pensions that are coming from the US, so the 401ks and Roth IRAs and things like that. So for different countries. So it's really all about Spain. This is where I live. I conduct my business here as well, and obviously internationally, but quite frankly, I pay all my taxes here as well. So I'm probably one of the best ones to understand the system and the process. So what we'll do today, we're going to try to keep this down to about 20 minutes. It's quite a complicated shall we say, agenda, but I'm going to kind of keep it succinct and generalized. If you want any more information, obviously contact myself or the guys at Your Overseas Home afterwards. So we're going to talk about paying tax in the correct country, a little bit about pensions, again, UK specific, but it refers to, or it also includes US pensions as well. ISAs and other tax investments and tax wrappers. A little bit about the Spanish investment bond, which is open to anybody that is a Spanish resident. A little overview of taxes in Spain, how they work and what there is, and some kind of do's before you move to Spain. So let's first of all just focus on tax residency, and this is every day people ask me this question, so it's a good place to start. I can be a resident in, for example, the UK, but I might be a tax resident in Spain. And the difference is how long you spend in that country. So once you spend more than 183 days, frankly, in any country, regardless of your visa status or citizenship or whatever, you are a tax resident in that country. Okay. Now, there are some exceptions. So, for example, there is a test which is called the Centre of Economic and Cultural Interest. What that is there to do is to stop people avoiding tax completely. So imagine I spent 182 days in Spain. I spent, a week in Portugal, and then I was, the balance 172, whatever it is, in the UK. I'm not a tax resident anywhere. Actually, I'm still a tax resident in Spain because my business is here, my house is here, my wife lives here. If you've got children, your children are in school, etc. So there are effectively two tests, and that's pretty much global. In the UK, you've got things like the statutory residence test. You can go online and do that, and it's a tick box, how many days a year do I do this? Do I have a house to stay in, etc. So it's pretty straightforward, but that's the key thing, 183 days, that's where you start. Okay, so paying tax in the country, I deal with, again, I get this asked all the time. I speak to people all the time, about taxes and what to pay and how and where to pay it. So really, there's a number of kind of thoughts here to put this into your head. But basically, you pay tax in the country where you live. If you're in the US, you're paying your federal tax. If you're in California, you're paying your state tax. If you're in Florida, lucky you, you don't have any state taxes. If you're in the UK and you've got a house that you're renting out, well, you pay tax on that in the UK because it's an immovable object. In terms of pensions, government-funded pensions retain taxing rights in the country of origin, and that's kind of a global policy, shall we say. For example, military pensions, some NHS pensions, again, UK specific, police pensions, but strangely enough, not your state pension. That's not classed as a government-funded pension for whatever reason, and I don't know the answer to that, so don't ask. These pensions are added to your total income. So again, we're talking about Spain here. So you've got a progressive table of how much tax you pay, the same as the US, same as the UK, same as Portugal, same as France, but they're not taxed, but it does notch your table, your income table up. So it means that the amount that you're paying above that, so if you've got a secondary job or you've got secondary income, does increase a little bit. Now, again, tax resident in Spain, you're living in Spain, you pay your taxes here, end of. However, of course, there are one or two exceptions. So things like property income. If you have a property in the US, for example, if you're a US resident or citizen, clearly you pay your local taxes on that income first. If there's anything additional to pay, you would pay that in Spain. Likewise, in the UK, if you're renting out your property or a property or multiple properties, you pay the tax on that property income in the UK first. And that's because it's an immovable asset. It's bricks and mortar. You can't up it and move it around. Okay, so what about pensions? And again, this is a little bit UK specific, but it's the same if you've got a 401k, I've got a Roth IRA, whatever type of pension wrapper is, it's all fairly similar. So a couple of things first and foremost is PCLS, pension commencement lump sum. So if you are drawing a lump sum out of your pension, if you're allowed to do that, and generally in all UK schemes you are, CUROPS you are, and also in US, for example, schemes, it's taxable in Spain as income. And I'll give you an example. Maybe you've got a SIP in the UK, it's got £100,000 in it, and you decide to take out your 25% tax-free lump sum. It's only tax-free in the UK. It's not tax-free in Spain. It's classed as income. So that £25,000, and you need to pay your tax to the Hacienda. So all income is taxed, all pension income is taxed. Oops, sorry. I don't know what's going on there. Just lost that for a second. Sorry, Christopher, I've lost something.
That's fine.
There.
We will bring it back somehow.
1 second, let me just do that again. I disabled all that as well.
So we've got some interesting questions coming through while you're looking at that.
There we go.
There we are. Okay, we're back.
That was annoying. Sorry about that. That's technology for you. It shows you it's live, though, hey?
It certainly is.
The income is taxed as pension income is taxed, as pension income, except for those government-funded ones I explained earlier. Something you might not be aware of is that even though you're a Spanish resident, you can still fund a UK pension up to £3,600 a year, which a lot of people don't know, and you get tax relief on it. So actually what goes into your UK pension is £4,000. So there's a little tip for you there. That's makes you kind of £400 a year for doing nothing. And also in terms of pensions, state pension, this is referring to the UK, check your NIC contributions, make sure that you're up to date. You do have an opportunity if you move into Spain and you are employed, that you could use class 2 contributions to top up your level, and class 2 are only £164 a year versus a minimum of 825 for the normal class 1 or class 3. Again, you need to talk to somebody just to understand that clearly. So what about other stuff? ISAs, investments, property. What is tax efficient in your country of origin is not tax efficient in Spain. Spain does not recognize tax wrappers from other countries, full stop. So everything is taxed on the basis of the capital gain. So between 19 and 24% annually on the growth. For example, ISAs in the UK, winnings, I've called it winnings, I don't know whether winnings or not, from premium bonds, growth on stocks and shares, even if they're held inside a tax wrapper, even your lottery win is taxable, I'm afraid, in Spain. So when you win that million on the Euro Millions in Spain, or the big one at Christmas, you're going to have to pay the government about 24% on top of that winning. However, there are products available. One here is a Spanish investment bond, which does reduce that tax liability substantially. And I'm going to touch on that in a moment. So one other thing that also comes out is, what's this thing, Modelo 720? Modelo basically means Form 720. Any assets over £50,000 that are held outside of Spain have to be reported on that form. Now, there used to be massive fines for not doing that. However, those fines have had to be reduced because of a challenge by the EU. However, you still have to do it. You don't get taxed on it, but you have to declare it. Now, of course, the two tie together in that have you paid the tax on the growth on that asset. So when you declare it the following year, and it's now 60,000 euros, for example, obviously you'll have to pay capital gains tax on that basis. So a little bit about the Spanish investment bond. And again, this is just very general. Specific advice, you need to speak to myself or another professional company. But they are very popular. They're available as well in Portugal, a hybrid of it, and the same in France. And these are provided by big multinational institutions. So it's taxed, first of all, as an insurance product, not capital gains tax. So it's, sorry, not incomes, it's capital gains tax. So it's got kind of a insurance wrapper around the outside of it, shall we say, in terms of the way the product is set up. It's designed to be held between 5 and 25 years, or longer if necessary. They can provide monthly income as well. So, for example, when I help clients and they say to me, okay, I'm getting my pension, or I've got dividends coming in, but I just need a little bit more. So we'll set it up in a way that it's generating income for the client. You only pay tax, and it's the capital gains tax, on the slice that you withdraw, so only on the profit that's withdrawn. Again, it's a little bit complicated to explain on a webinar, but I can go through that on a one-to-one. The big deal, I think, with this is the tax is paid on your behalf. You don't have to report this to the Hacienda. You don't have to fill out a Modelo 720. It's all done for you, again, by the institution. People like the Prudential, Lombard, Utmost do all these types of products. And also there's no tax on the death benefits, you know, if you do pass away, and it's easy to pass this down through a generation. So they're usually done on a joint life basis. And the types of investment providers, you know, you can invest in the S&P 500, you know, the NASDAQ. You can use individual mutual funds, you know, all the big multinational and global names you would expect. Okay, so a little bit about Spanish tax. The big headline everybody panics about is the wealth tax, or as it's now called, the solidarity tax. Quick background on that. Andalusia, where I live, got rid of the wealth tax because they worked out that the 20 or so, no, it wasn't 20. Yeah, it was the 20 people that they sampled that had paid wealth tax the previous year. 50% of them had left the country already. So they scrapped it. They said, we'd rather have those people here spending their money. The federal government got upset with that and said, no, you can't do that. So we're going to bring in a wealth tax instead, a solidarity tax instead, which is at 3 million per person. So it only attracts you know, a certain amount of high net worth clients. However, there are some exclusions. There are ways to reduce that. There's what's called the 2060 rule as well. So it's actually not as big a headline as you think. So other taxes, obviously, income tax, social security. Income taxes are, you know, graded, like I said, progressive, just like they are everywhere else in the world. The highest rate is 48%, and that kicks in at it's about 180,000 a year, so it's quite substantially high. Social security is now based on what you earn as well, so that ranges really from about 500 a month upwards. So that's if you're employed, if you're earning. Capital gains starts at 19%. I think it's the first 6,000, and then it goes up to 24% shortly after that. Again, that's the same now as the UK. Inheritance tax can be a problem, like it is almost everywhere else in the world, I guess, but there are ways to mitigate it. Absolutely essential you update your will if you move here, so that you know your affairs are taken care of if you pass away. Other little taxes, you know, your property tax, your local tax is called the EB. You know, you have a basura if you own the property, which is rubbish. You know, it's literally a rubbish tax. It's a bit like the kind of council tax you get in the UK, but much, much cheaper. I mean, all those types of taxes are very low. Example is my EB on my property is 480 euros a year. Obviously, you've got VAT, call it sales tax, I guess, in the US. EVA is 21%. There are exclusions, lower rates, you know, things like baby food, baby products, medical expenses are always lower. And if you buy a new build property, you won't be paying the transfer tax, but you will be paying the EVA on a new build, which, by the way, you cannot use as part of the investment for a golden visa, which is pretty much coming to an end anyway in the next few weeks. So a few do's, things that you need to do before you move. Obviously take some advice from Smart Currency. That's really important, because I would have thought 99% of people on this webinar are moving from a different currency. So you can use Smart Currency to lock in that rate. So you've got no risk of things moving against you. Obviously, you need to book a meeting with a financial services company like ourselves, somebody like myself who's got the experience and the expertise, and I like to think on the ground as well. So, if people say, how do I get a mobile phone? Okay, it's easy. Use these people. They've got a great reputation, and it's cheap as chips. Although chips are not cheap anymore, are they? Sorry about that. You need to sell your main residence before becoming a tax resident in Spain. I think that's pretty critical right across the board, because once you become a tax resident in Spain, it can no longer be your main residence. So in a lot of countries around the world, your main residence is exempt from capital gains tax, the UK specifically. And that can be a serious chunk of change. Again, people are not aware of this, but when you come to Spain, you buy, even if you live here and it's your main residence, that is subject to capital gains tax. So, I've been here now 7-8 years. When I leave, when I sell my property, if I do, I will have to pay 24% on the gain. So it is a bit negative in that respect. Consider liquidating other assets. Obviously, take some advice on that as well. The ones that I mentioned before, things like ISAs, banking, etc. I wouldn't ever suggest people close bank accounts in the UK. I think it's or the US, wherever it is. It's always good to keep that relationship and keep that one ticking over. But you will need to check with your provider if they'll still look after you once you move. And again, just reiterating the pension that we started with. Take your PCLS, your pension commencement lump sum, take that cash out before you become a resident in Spain. Okay, some obvious ones here. Make sure all your institutions you're connected with are aware of your new address, particularly your life insurance company. Write to them. Obviously previous to that, you might want to check with them, but write to them and tell them of your new address and get them to confirm back to you that they're still covered. 99% of the time they should be, but you never know. And if something happens to you, you're not around to argue. So that's really important in my book. If you're leaving the UK, advise His Majesty's Revenue and Customs of what's called a notice of leaving. It's a form. When I'm leaving, goodbye. And obviously do things like update your will in Spain and in your home country. It's really, again, really important to keep those kind of things updated. A will in Spain is a bit more difficult to do, just unless you speak, good Spanish. But you can do it at the notary on your own if you're happy with the level of Spanish that you've got, or you can get a lawyer to accompany you as well. But you can elect to have your home country inheritance laws applied to your property, so you don't have to go with Spanish forced heirship, as it's called. Okay, I've rattled through that, and apologies for the break in the communications there when my phone was going off at the same time. I've got a QR code there if anybody wants to book a consultation. These are my contact details here in Spain and email address. Christopher, you got anything for me? Any questions? Or
Yes, we've got questions. As ever, it all seems quite clear, and then but the devil's in the detail, and we've got some details. So let's go through from the bottom. Okay. Well, okay. This is Robert has asked, what are the taxation benefits of moving a pension to either to Spain or Portugal? So are there any benefit to moving the whole pension?
There are no benefits, frankly, at all, except, and here's the caveat, since the budget, pensions are included in your estate, for IHT purposes. So that's something that's got to be considered, on how you manage that. The benefits of moving a pension into, for example, an international SIP, is that you're then working with a regulated provider, because once you are a non-UK resident, about 90% of the institutions will not be able to deal with you, because since Brexit, unless they have what's called a MiFID II license in Europe, which we do, they won't be able to provide you with financial advice. I would always take that on a case-by-case basis, and it depends which country you're thinking of relocating to. And obviously, you need to have an advisor who's got an understanding of the new countries that you're going to, as well as the one that you're leaving.
Okay, thank you. Richard has asked, if I stay more than 183 days as an Irish EU citizen, do I still pay non-resident income tax?
No, because you're a resident.
Okay, great. And so I don't need to ask what rate it is. Okay. So Jane has asked, if I have a house based in the UK and one in Spain, would I need to pay tax in both countries if I flip between the two countries?
No, because you can only have one country of tax residence. Again, going back to that 183-day rule. So you're either a tax resident of the UK or you're a tax resident of Spain. You can't be a tax resident of both.
Great. So what happens if you? I know this. No. Okay, let's stick with our retiree audience. So Chris has asked, can I get my UK state pension paid in Spain, but also get the triple lock?
Yes, and yes. Good question, actually. Very good question. So for those people that don't know what the triple lock is, it's basically the increase in the UK state pension, which is triple locked with 2.5% average earnings or inflation, whichever is the higher. And obviously over the last few years, inflation's been very high. So I think at one stage, the state pension went up by 8.5%.
Yeah,
so,
it was. It was fortunate because in the UK the inflation rate was much higher, and so the pension went up about sort of 8 or 9%, but inflation in Spain was only about 2%. So we all gained quite well from that. Yeah.
So just to kind of clarify that, yes, you can get your pension paid in Spain, and actually HMRC are unusually efficient. They're not usually efficient at other things, but they're very efficient at paying you. So they will pay you into, for example, a euro-denominated bank account in sterling, but you'll get kind of institutional rates on the foreign exchange. So there's nothing really to worry about with that. And once it's set up, it just rolls on. I know people have been getting their state pensions for many years, and you do get the triple lock. Now, I think at the beginning you mentioned we had some guests online from Canada. Well, Canadian residents don't get the triple lock because the agreement between the two governments was never ratified. It's the same as New Zealand and Australia. They don't get the triple lock. So once you start taking your pension in those countries, that's the amount that you will be paid for the rest of your life. It will not change. It will not go up.
Okay, great. Okay, well, not great actually, but good enough actually. Okay, Jane has asked, if I have a big bank balance in the UK, would I still need to pay taxes in Spain? My plan was to draw down from her savings.
Yes, you would, but it's not good advice. Obviously, cash on deposit is, at the moment, about 3.5%, 4% if you're lucky. Obviously you want to make that work harder for you. So that's where it comes in with the Spanish investment bond, where you can get it invested according to your risk profile. And that might be cautious, balanced, growth, aggressive, whatever. But you would need to declare that on your Modelo 720. And you would need to pay tax on it each year on the gross. So you get a tax certificate from your bank, and that's what you would declare to the Spanish authorities, and you would pay between 19 and 24% to the hacienda.
Okay, we've actually run out of time, but I'm going to ask this one because it's a nice one to finish on. I want to buy a olive or almond farm. Is it better to do a personal buy or through a company? Ooh, this might get a bit complicated. Or through a company from the UK or a Spanish company?
Again, it is a little bit complicated. There's not a massive amount of difference, but it comes down to more to do with kind of inheritance and later on in life, and how easy it is to actually get rid of that asset. If you're holding it through a company, it's easier to transfer the shares than it is, sell a property, for example. And you can offset, obviously that is then a business effectively, so you could offset a lot more expenses, but then the other side of it is then you have corporation tax at 24%. So, quid pro quo, there's swings and roundabouts to both. But the almonds are in great demand because we've had a very poor harvest for many years.
Oh, really?
Likewise with olive oil, it's almost over doubled in price over the last kind of 3 years.
It certainly has. It certainly has. We've done an article, in fact, on ULC's Home all about why not just go to buy a farm in Spain and get your own.
Well, I've got about 30 olive trees, and believe you me, it is really hard work. So there's a lot of other stuff involved in it. Yeah.
Okay, well, fantastic. We've had lots of questions. If your question wasn't answered, do please get your camera out and just your phone camera, and just use the QR code, and you can set up a free consultation with Robin. Now, if you have found this webinar helpful, there should be a link coming up for Trustpilot. So if you could give us a review, that would be great. I see that Holborn Assets has 1,800 5-star reviews or something incredible. We'd like a few ourselves. So do please
we'll send you some over.
Do please leave a review on Trustpilot using that link. Sorry, and just to say, I know it seems a long way away, but can I just put our first plug in for the ULC's Home virtual event, which is on March the 22nd. You should see a link coming up to register for that. Like I say, I know it's a long way away, but if you're planning on moving to Spain this year, it's a great way of getting all your questions answered. It's a day packed with it's a Saturday packed with seminars, one-to-one appointments, estate agents there showcasing their new properties, tons of stuff, all on one day. So, and I'm sure that Holborn will be joining us there too. So, I'd just like to say thank you very much, Robin, for giving us some fantastic information there, making a relatively dry subject really interesting. And thank you to our audience for sticking with us. And good luck on your move to Spain and getting your lovely retirement out there too. Thank you, Robin, and thank you to our audience.
Thank you very much. Have a good evening. Take care.
Yes, bye-bye.
Bye-bye.